How would you like to have your cake and eat it too? Well, unfortunately, we're not talking about dessert today, but we are talking about tax. So I guess what I should have said is, how would you like to have a tax deduction and also a credit at the same time? The Connecticut Pass-Through Entity tax, that's what we're going over today. Mike with Ledgerly, back at it again with some tax strategy, giving you the best tips, tricks to implement in your business, your individual life, or both. So if you love talking tax strategy, please hit that subscribe button and welcome to the family. So let's talk some context that we need to understand. Today, we're talking about Connecticut. Now, if you're not from Connecticut, that's okay, because there are some states that do have this thing called the pass-through entity tax. And what it is it's a tax that's paid at the business level that ultimately flows down to you as an individual. So the way to think about it, and we're going to go to the whiteboard, is that the business pays it, the business gets a tax deduction, and that credit comes back to you on your individual tax return, almost like a W-2 withholding. And let's talk about why it makes sense to pay at the business level and get this credit rather than just paying an estimated tax payment at the personal level or increasing your W-2 wages that are withheld. So let's go to the whiteboard, draw this out real quick to understand what's going on here. All right, at the whiteboard here, talking about the Connecticut PTE tax. And what this is, it's an income tax at the corporate level, 6.99%. And who benefits from this? Primarily S corporations and multi-member LLCs partnership that's on a 1065 tax return. So how this works is this tax, 6.99%, will get paid on call it the net income of the business, right? So if the net income of the business is $100,000, they're going to pay 6.99 on that. So the business is going to pay $6,990. And the cool thing about this is this $6,990 is a federal tax deduction to the business. And then also a portion of it, I want to say it's like 87% right now. It's actually 87.5% of that number gets passed on as a credit, almost like a withholding to the shareholder of the S Corp on their 1040 and the partners of the partnership on their 1040. So they're getting, in this example, depending how many partners there are, a total of $6,116 of a tax credit. So let's draw this out in a different way that might be a little easier to understand. So at the bottom here, we have our 1040 tax return. Up here, we have our S Corp or our 1065. Now remember, we're talking about state income tax. For federal income tax, that gets paid out at the individual level. Now it can be paid out here, but it's not going to be a business tax deduction. It's going to be a distribution. Now, why do we want the entity to pay the Connecticut Pass-Through Entity tax? There's two reasons. Number one, we're getting the federal tax deduction. And number two, we're getting that Connecticut credit. Essentially, it gets paid out, CT PTE, and the credit flows back onto your 1040, almost like a withholding credit. Now, what business doesn't want a federal tax deduction? I know I love federal tax deductions, but why do we want to make it at the entity level? It's easier just to pay it at the individual level, right? We just plop it right out of here. Or we increase our W-2 withholdings. The biggest reason why we don't want to pay it at the 1040 level is because of the SALT limitation, state and local tax limit. If you want to learn a little bit more about this, go over to Andrew's video on itemizing. He does a great job of talking about this. But these taxes, this Connecticut pass-through entity tax or the Connecticut withholdings, that falls in the state and local taxes. So if we're paying more than $10,000 in this Connecticut pass-through entity tax, we're only capped at $10,000, especially if we itemize. So it's kind of like the HSA concept, if you will. I'd rather have the HSA knowing that I'm getting the tax deduction rather than not having the HSA and have to hedge on hitting 7.5% of my adjusted gross income. Like what? Why don't I just get the tax deduction and the credit? Now, yes, it is a little bit more work, but that's why you need a good tax advisor in your court to remind you that these payments are due every quarter. All right, last thing to show you guys is where is this tax paid? It's paid on MyconneCT. So if you're a business owner, I know this page looks familiar. We find ourselves on this page maybe once a day, maybe twice a day. Yeah, you're going to log in with your username and password. If you don't have an account set up already, you would go right here, new businesses, need an account, need a registration number. You pay it right here. You log in, username, password, bada bing, bada boom, you're good. But make sure you're setting your quarterly reminders to log in and make these payments, especially if you do sales tax, payroll, all that stuff's in here already. So like you're going to see that when you log in. You're going to see Connecticut Pass-Through Entity tax. Also, sidebar, as of right now in 2025, the Connecticut Pass-Through Entity tax is optional. it doesn't need to be paid. However, we think that 9 times out of 10, it is beneficial because you're getting the tax deduction and the tax credit, and there's that SALT limitation. But do due diligence and talk with a good tax advisor to see if it's worth it or not. All right, let's back this up. This is a very rare video because this is so state focused rather than federal. However, you might live in a state, or if you're lucky enough, maybe you live in a state where there is no income tax, but we're in Connecticut, so I digress. This is state focused, not federal focused. However, the awesome thing about the Connecticut Pass-Through Entity tax is you're getting that federal tax deduction. You're getting a credit just like a withholding, and we don't need to worry about the state and local, that SALT limitation, especially if you itemize, you're going to get that credit regardless. So for my fellow Connecticut business owners out there, I hope this was helpful for you. For you non-Connecticut business owners, do your due diligence because you might live in a state like New York or Massachusetts that has this pass-through entity tax option. And most likely, it's going to work the exact same way that Connecticut does. And if you're a business owner that lives in Florida or Texas or New Hampshire or one of those tax-free income states, then kudos to you. Tipping my hat, my treehouse hat. Regardless, we're all in this together, guys. All you business owners out there, keep grinding it out, and let's take advantage of those tax deductions and credits together.